Here's 3 simple steps to make $500 from trading. Step 1 is to increase your capital. So before I talk about what to do, let's talk about what not to do. I can guarantee you that 99% of beginner traders, they have the wrong mindset because they are doing this one thing, and this one thing is really preventing them from actually getting $500 a day or making consistent gains. And the one thing is being obsessed with flipping their small accounts. So let me give you an example on what I mean. Let's call this guy John. He's the trading bro, right? He's a consistently losing trader. One fine day, he's scrolling through YouTube videos on learning how to trade, and he see this guru who turned $100 to $1 million in 60 days. Holy shit, if this guy can do it, I can do it too. And then he see another video from this another YouTuber turning $20 to $10,000 in 3 days. Oh my god. When they start watching these videos, they realize that it's possible to turn a small amount of money into a very large sum of money in a very short period of time. That is where now John have this expectation that he can turn $100 to $1 million or $100 to $500,000 so that he can buy his dream car. And the next thing you know, John deposited $100 into his trading account and tried to follow this trading guru's trading strategy and try to turn this $100 into $1,000. And the thing is, he managed to make some nice profits. You know, one day he's up about $50, another day he's up about another $200. Slowly but surely, he's achieving his goal of turning $100 to $1,000. But then, the next thing you know, he took a bad trade, he lost $500, and now he's back to $0. Now listen, this is what 99% of beginner traders do. They aim to get unrealistic returns, which is just not sustainable at all. Yes, one day you could be making $200, another day you could be turning your $100 account into $800. But are you able to generate consistent profits? Are you able to keep the money that you have made? That's another question. Now, the reason why I know how beginner traders think is because I was in that exact position 5 years ago. So this is me 5 years ago, right? I was working a minimum wage job earning less than $1,000. And this is when I first discovered Forex trading. So after watching a bunch of trading videos on gurus flipping their small accounts into millions of dollars, that is where I deposited $500, which is like half of my paycheck, into my trading account. And then I would try to grow it to $1,000 and then $2,000 and then $5,000. And the next thing you know, I actually managed to make some good profits, right? There was this one time where I turned $500 to about $8,000 in just a few days. But the next thing you know, I over leveraged and I lost it all. So I'm back to $0. But because it felt so good turning a small amount of money into a large sum of money, I deposited another $500 and I thought that I could do it again. And now looking back, I realized that this was actually gambling, because the next thing you know, I will actually turn the $500 to another $2,000, but then I'll lose it all again, and then I will deposit another $500, and then this whole vicious cycle will continue month after month until I blew a total of 7 accounts and lost over $3,500. Bear in mind, that was everything I had at that point of time. That was like my life savings. And let's be honest, this was very painful for an 18-year-old broke high school college kid back then. So what's the solution to this? How do you actually make more money and make it in a way where it's sustainable, like making $500 a day? The solution is, if you want to make more money from trading, you just need to increase the capital that you have available to trade with. Now let's compare the potential of a $50,000 live account with a $100 live account. Let's say today you want to make $500, okay? On a $100 account, to make $500, you need a 500% return, right? Which means you not only need to double your account, you need to like double your account 2 to 3 times before you can actually make $500. Right? And let's be honest, it's incredibly difficult and risky and unsustainable to be making 500%. It will require you to either leverage your account heavily or take on positions that are way too large for your account. And the thing is, if you do that, and you lose a trade, you pretty much just wipe out your entire account. Now, on the other hand, on a $50,000 account, to achieve the same $500, you only need a 1% return on your capital. And this is a much more realistic and achievable target to aim for. And once again, just look at this, right? You are trying to make the same amount of money, but just by having two different account size, it just became 500 times easier. So if you're still not convinced, let me just explain why more capital matters. First of all, you get better risk management. Because if you're risking 1% on each trade, you can actually afford to take calculated risk on a $50,000 account. But if you're risking 1% on a $100 account, guess what? You're making $1 or $1 to $5 on each trade. And that's not even enough for your breakfast or your morning tea. With more capital, your profits also compound more effectively over time. A $500 profit on a $50K account grows your account meaningfully, while the same gain on a $100 account is just unsustainable. And last but not least, it gives you so much lesser stress. Because when you trade with a larger account, it reduces the pressure to actually chase unrealistic returns. Instead, you are just focused on risking 1% of your total account on each trade, and you are actually focused on growing and compounding that account slowly and steadily over time. Now, this all sounds good and all, but you might be thinking, Brad, I'm broke. I have less than $1,000 in my bank account. So how the hell do I get a $50,000 trading account? This is where prop firms actually come in and help you out. In order for you to get access to much more capital than you have right now, you need to take advantage of funded accounts. To make $500 a day, I recommend you to either get the $50,000 account or the $100,000 account. Ideally, you want to choose one that suits your budget. In order to get a 50K funded account, you will be required to pay a refundable fee of 345 euros. But for a 100K account, it's 540 euros. So obviously you want to choose one that fits your budget. Now, the upside to having a larger account is that it's much more easier to actually make $500 a day, because on a 100K account, you are aiming to make 0.5% on each trade. But on a 50K account, you're aiming to make 1% on each trade, which translates to $500 a day. However, with that said, the downside to having a larger account is that it's harder to manage it psychologically, especially if you are like a beginner trader and you're not used to seeing big numbers. If that's the case, then I wouldn't recommend you to actually go for the 100K account. And instead, just focus on the 50K account and trying to aim for that 1% return a day. So if you want a complete blueprint on how to get funded, you can watch this video right here, where I review the strategy that has allowed so many of my students to become six-figure funded traders within 6 to 12 months. Because the truth is, I can't be talking about how to get funded in this video because that's like another topic, and if I do that, this video will end up being like 1 hour long. The second step is to focus on high probability setups only. If you want to make $500 a day consistently, you should only trade setups with a proven edge that aligns with your strategy. You see, you don't want to be wasting your precious trading capital on low probability trades, which is gonna cause you to lose money. Now let's look at the entire game plan and trading strategy we are going to be using to make $500 a day. The account size will be 50K, like what we mentioned just now, and we are gonna be risking 1% of the total account capital on each trade, which means we are risking $500 on each trade. And the risk to reward is going to be 1:2, right? Which means for every $500 you risk, you're gonna get $1,000 in profit per trade. Now, the reason why we have this rule is because if we take 2 trades a day and we win one, we make about $1,000. And if we lose the other one, we still make $500. Because when we lose $500, and when we win, we make $1,000. So $1,000 minus $500, it's $500. This allows us to ensure that we are making $500 per day consistently, even though we are maybe winning half of the trades that we take. As for the trade frequency, like I said, we only want to focus on high probability setups, which means we want to avoid low quality setups at all costs. And that means If you don't see a trading opportunity that aligns with your strategy, that checks all the criteria inside your trade plan, we are not going to be trading on that particular day itself. This means we are only going to be taking 1 to 2 good trades per day, max. Now that you understood the game plan, let's go through the trading strategy. So we are going to be using the trend following liquidity strategy, which consists of 3 simple steps. The first step is that you want to trade with the trend on the 5-minute time frame. So looking at price right now, we saw that price has just created a break of structure to the upside, which means price is in an uptrend, right? So in an uptrend, we want to actually enter for a buy. So at this point of time, after the break of structure, we're anticipating price to start pulling back to create a new higher low before it goes up even further. So we want to enter when price actually create that new higher low. Which move on to the next step, right? We want to identify the high probability zone that swept liquidity. Okay, so when I look at this price action right here, what happened was that price went up, pulls back to create a new swing low, goes up, but instead of going up and break structure immediately, it came down here and swept the available liquidity below this swing low right here before we get that strong demand stepping into the market and pushing price up, which signal to us that smart money entered into the market at this price point right here. So this tells us that there was a liquidity sweep at this area right here. And with that said, that is where we can mark up our high probability sweep zone, liquidity sweep zone or demand zone, whatever you like to call it. And this is the zone that we want to be entering on. Now, we know that price is going to be pulling back after the break of structure. Now it's just a matter of patience. It's waiting for price to actually get to your point of interest right here, the high probability zone. And once it does, that is where we will enter at the edge of the zone. And that's pretty much the entire trend following liquidity strategy. So you can see the minute price stepped into this zone right here, you would have been tapped into the trade, right? So I will actually advise you to place some form of limit order at the edge of the zone, right? So you just place a limit order at the edge of the zone, and then place your stop loss behind the zone. And for your take profit, like I said, we are targeting 2R, right? Because we are targeting that 1:2 risk to reward ratio. So that is where price come in here, tap you into the trade, and now you are inside the trade. So now you might be wondering, what lot size should you be using for this particular trade itself? That is where we want to look for our best friend, a position size calculator. So you can just go to Google, search for a position size calculator, or you can use the one that is provided by my FX book. So I come here, I just type in the currency pair that I'm trading, so which is GP USD, and I'll put down the account currency is USD normally, and I'll put down my account size, which is $50,000, right? That's the amount of money I have in my trading account. And since we are risking 1% on each trade, you can just put 1 right here. And then for your stop loss, this is where you can just determine your stop loss right here. Okay, so if you're entering at the edge of the zone, our stop loss would be about 3.3 pips, right? Since we are placing the stop loss behind the zone itself. Okay, so for me personally, I like to give it a little bit more breathing room, so I'll probably put it like around here, right? So that's about 3.5 pips, okay? So that is where I'll come here, put down my stop loss as 3.5 pips, click the calculate, and this is the magical number. So we are going to be using a lot size of 14.29. Okay, so you just put this onto a MetaTrader 4 before you actually execute the trade, or before you actually place your limit order. So yeah, once that happens, boom, you are inside the trade, and 1:2 should have been hit right there. There we go, right? Within the span of 15 minutes, you just made about $1,000. I'm not even kidding you, right? You can see you got tapped into the trade right here. Next thing you know, price goes up there, smash your TP right here, right? As simple as that. The trend following liquidity strategy is that simple. Now for the advanced traders who knows how to actually scout properly, that is where you can even jump down to the 1-minute time frame, right? Once price step into your point of interest and look for that refined entry, right? So they can get like a tighter stop loss just like this. And in that case, you would have hit your take profit maybe like within 5 minutes. $1,000 within 5 minutes. That's absolutely insane. So now let me show you another example on the charts itself. So using the same strategy, first thing we have to do is to actually identify the trend. We see that price is in a downtrend because price has been creating lower highs, lower lows. And we saw that price has just created a break of structure to the downside. Right, so now, same thing, we are just waiting for price to pull back. And where is it going to pull back to? It's potentially going to pull back to the high probability zone that swept liquidity, right? Which brings us to the second step, and that is to identify that high probability zone that swept liquidity. Okay, so if we look at this right here, we saw that price broke structure right here. And before price break structure, what happened? Okay, price comes down, pulls back, goes down. But instead of coming down there and break structure straight away, price actually went up there, sweep the available liquidity above the swing high before we get a sharp V-shaped reaction, which signal to us large amount of supply has stepped into the market and the smart money is in, right? So based on this, we saw that this is our liquidity sweep, all right? So that is where we mark our liquidity sweep right there, and that is where we can identify the high probability zone that swept liquidity. So I'll mark this entire candle just like this, right? This will be the entire supply zone that swept liquidity, right? And this is our high probability zone. So now we are just waiting for price to pull back to that zone itself, right? After the break of structure. So when price is just going down like this, right? You want to be very, very patient. Like I always say, you just gotta be very, very patient. Because the thing is, if you start taking a bunch of low quality trade setups right here, you start rushing into the trade because of fear of missing out. Guess what? You would have to place your stop loss all the way above this last swing high, and your take profit will be super duper far away in order to make it a 2R. And in that case, it will crush your goal of making $500 a day, right? So be patient. Always wait for price to pull back to that zone that swept liquidity, right? Because like I said, we want to look for the high probability setups, and this is what we deem as a high probability setup. Okay, so price is approaching the point of interest. That is where I will place once again that sell limit order at the edge of the zone itself, place my stop above the zone, and then TP at 2R. So it will just be just like it is, a very quick in and out. All right, let's see what price does. Okay, price goes up, eventually it's pulling back, and bam, it taps us into the trade right here. Okay, so at this point of time, price has stepped us into the trade, or rather our broker has stepped us into the trade, and you can see supply start stepping to the market, right? This shows us that the smart money are coming in as well, and that is where, boom, we got price going down to smash our TP. It's genuinely as simple as that, right? When you can understand the algorithm of the market, you can understand where smart money have entered into the market and where they are going to enter again. That is where you have pretty much unlocked a magical power of just generating cash from the market, right? It's literally like money falling from the sky, so to speak. So yeah, that's pretty much the entire strategy, right? Maybe just show you one last example. Just gonna quickly run through this example right here. Break of structure to the upside, and then price comes down there. We are waiting for price to come back down to this sweep zone, right? The reason why I've identified this as our high probability zone is because if you look towards the left hand side, price went up, pulls back, goes up, comes down, sweep all the available liquidity below this low right here. That is where we got our beautiful sweep zone, just waiting for price to pull back into this zone right here, just doing nothing right now at the moment, right? And this is where all the newbie retail traders, the trading bros, will be entering for the trade, just for us to grab some of their liquidity and then just enter at the edge of the zone. Price step us into the trade right here. We are in. We went into a little bit of drawdown right here, but it is what it is. Remember, we are patient, right? We are patient, and eventually price goes up right here. In our way, we are in TP right now. Okay, this is where you can start celebrating a little bit, and the next thing you know, price goes up there and smash your TP right there. As simple as that, gentlemen. The third step is to master your emotions. I want to give you some bonus tips if you're still watching this video. This will allow you to get to that goal of making $500 a day much more easily. The first tip is, this strategy is simple but not easy, right? You can see how simple and mechanical this strategy is, right? The trend following liquidity strategy just comprises of 3 simple steps. But the thing is, the hard part is when you are waiting for that high probability trade setups. Because there's gonna be some times where you have to wait hours just for that high quality setup to present itself. And you have to be okay with that. In fact, you have to be comfortable with that. Because if you're impatient, you are just gonna get back to where you were, right? Which is a losing trader, which is acting like the trading bro who's focused on flipping small accounts and just not really getting anywhere which is just not healthy for your trading in the long run, right? So yeah, it's simple but not easy. Just stick to the plan. Tip number 2 is to set a daily goal, right? To hold yourself accountable and to prevent yourself from giving the profits back to the market. So my advice is, if you reach your $500 target early, stop trading for the day to avoid over trading and giving back the profits that you have made back to the market, right? Because after all, you set a goal to make $500 a day. Once you get that, just stop there. I can't emphasize how important it is to have some form of daily goal, because if you don't, you're just gonna be over trading. There is so many times where I will make like $5,000 in the morning, and then just because I'm greedy and I just continue trading throughout the entire day itself, I ended up losing like, let's say, $10,000 at nights. And as a whole, I lost $5,000 on that day. But the thing is, I have already made $500 within the first 2 hours of me waking up. So why the hell did I give back the profits that I've made and ended up losing even more money? That's greed, alright? So set a daily goal. And the final tip could be the most important tip, and that is don't focus on the money. I know you might be thinking, what the hell are you saying, Brad? The title of this video is how to make $500 a day. It's so that I can entice you into watching this video and I can tell you the truth about trading. The truth is, if you start to focus on money, if you start to obsess over the end results, you will start taking a bunch of low quality trade setups. You will start making a bunch of trading mistakes. You will force trades when there is no opportunities. You will start to revenge trade because you are so attached to money. You will start to take trades out of FOMO or greed because once again, you are so attached to money. I know this might sound very ironic, but if you focus on the money, you will actually lose even more money. So focus on building good trading habits and the money will come as a byproduct. Focus on mastering the skill set of trading. Focus on executing your trades according to the trading strategy every single day without fail. Right? When you eventually build all these good professional trading habits, that is where, like I said, you get to a point where you can just get money, extract money from the market whenever you want. Because you are that good. And I want you to be that good. So yeah, if you have enjoyed this video, I guess the next step would be to get started, right? To get started with the first step, and that is to increase your capital. So if you want to learn how to get funded, how to become a 6 figures funded trader, or just get a 50k funding account, I will advise you to watch this video right here. Like I said, this is literally the blueprint that my students have used to gotten over 6 figures in funding and make 10k to 30k a month consistently. This is really like the secret sauce, all right? And I'm giving it to you for free. So as always, remember, you're just one trade away.